Let's give you a sense of what's moving the markets. To expand the conversation, I'm joined by Makwe Masilela, who's Chief Investment Officer at Makwe Fund Managers. Makwe, very good afternoon to you. The conflict in the Middle East continues to escalate with growing concerns around energy security and supply disruptions. How has this latest round of tensions affected global oil prices?
Unfortunately, in a negative way. When we thought oil prices will get a little bit of a breather, we've seen oil prices going up again. And now it's not just only the question of the Strait of Hormuz that will be disrupted. We also had, Iran telling the Yemen Houthis that they must get prepared to start blocking or interfering with the Red Sea. And as a result, there are talks that anything that is going to be coming from Saudi Arabia, there will be some naval blockade. So that's not looking okay. Should all those things has to materialize, then oil prices will continue to skyrocket. But now we are trying to juggle that with the hopes that at least the guys are talking. There's a possibility that the ceasefire might be reinforced. So we are torn in between those two.
Now, what we do know is that Sasol's annual production update is also under sharp focus. Investors have been closely watching operational performance and the outlook for chemicals and fuels. What are some of the key takeaways there?
We are happy to see Secunda, performing at its best, highest production in almost 5 years. We are happy to see that when it comes to the international chemicals business, they've managed to strengthen that so that they can benefit from the favorable market. As we've seen, chemical prices have been going up. And yes, we've seen higher sales volume when it comes to liquid fuels. And also, we've seen that the refining margins have also been up, but partially offset by the hedges, the losses that they had on their hedges on the oil purchases. But generally, it is a positive result, and we expect them that with all this tension, Sasol happens to be one of those rand hedges that will continue to benefit because of high chemical prices and high oil prices. And remember, these are the guys who have managed to sort out some of its debt, but they still have a very long way to go.
Kumba Iron Ore has also released its interim production update. In that space, what stood out for you?
Given that the environment has been very challenging, the guys had very heavy rains. They had to deal with that. So that unfortunately affected their production by decreasing it by almost 3%. Sales volumes were down by almost 1% because of that planned maintenance by Transnet. So it affected the logistic part of things. And when it comes to the overall financial performance, as EBITDA, it was down almost 35%, all because of the strengthening rand during the period. I think it strengthened almost 11%. And also the iron ore in dollar terms were not that favorable, but their profits as headline especially also expected to go down by 43%. Remember, we are comparing this with a period where they once received a good settlement coming out of Transnet, so that has managed to skew all this reporting that we're talking about.
Makwe, as you and I speak, all eyes are essentially on Thursday's South African Reserve Bank Monetary Policy Committee meeting. Inflation has moderated, but global uncertainty, volatile oil prices remain a major concern. Is another rate cut the most likely outcome, or could we see the Reserve Bank deciding otherwise?
With the recent developments, I think it's most likely. And remember, the guys are looking at inflation expectations 3 months to 6 months from now. So if they think that inflation expectations will be elevated, then unfortunately they don't want to be behind the curve. They will say, let's just increase interest rates another 25 basis points. Not that I wish that I'm correct. I hope I'm wrong on this, because no one wants an interest rate increase.
And very lastly, we know that gold remained resilient while industrial metals have had a more mixed performance. What is the commodities market telling us about the global economy at this present moment?
That inflation worries were kind of lessening, and as a result, one doesn't expect interest rates to be rapidly increased because gold itself doesn't do that great in an environment where interest rates are up because it doesn't yield anything. And other commodities tends to benefit from the fact that if sanity prevails, if these new talks gets to renew the ceasefire, then global economies probably will do okay, and there will be demand for the commodities.
Very well. Thank you very much, Makwe Masilela. Thank you for that breakdown of what's leading the markets. Chief Investment Officer of Makwe Fund Managers.